If you've lost money in crypto this cycle, you're not alone, because this has really been one of the toughest crypto cycles we've ever been through. And that's because it really hasn't been like many of the other cycles. But there is one guy that actually has called this cycle very, very, very right. Not only has he called the Bitcoin price, he also called the ETH price going down. He called Bitcoin dominance going up. He called the 𝗙𝗫𝗍 breaking down. And he even called the most recent stock market correction. And so now, with about a few days to go until May, I've got a few questions. Are we going to sell in May and go away? Is this going to be a bull market that looks like the 2021 bull market, where we get a double bull market with the second higher top? All these questions and more are going to be answered today by our guest, Ben Cowen. I've got him back on the show. I think it's going to be an amazing, amazing, amazing show. So buckle up, chaps. Let's get the show on the road. As I said, there are very, very, very few people that have actually called this cycle correctly. And I do think that Ben is one of the only ones that has called, I guess you can't say every call right, but he's called the majority of the calls right, specifically the ones that actually count. So I think it's going to be a very, very, very good show today. Guys, if you are new to the channel, obliterate the like button, subscribe to the channel if you're not already subscribed. There are nearly 1.17 million subscribers on this channel. So we need to get the number up. Also, the more likes you give, they're free for you guys, but the more likes you give us, the more this show gets distributed. I think today's going to be a banger, banger, banger show. So listen, without further ado, let's get Ben on. Ben, how are you, my friend?
I'm doing great. How about you?
Yeah, as I said, there's very few people that have actually got this, that have actually called this cycle right. This cycle's been one of the most complicated cycles. But I think if I look at your track record, I mean, you've been posting this tweet where you've just been checking them off as you go. Bitcoin dominance to 60%. Market sells off, ETH goes home, ETH has now gone home. I guess the next thing that happens is the Fed ends QT, the market rallies. The last time you came on here, you mentioned that you thought there would be a chance that we could get an early cycle and the cycle could end around April. And then we said probably later, like the late part of the cycle could probably end around November. And I guess if I would have got you on the show like 2 weeks ago, we probably would have been having a very, very, very different discussion. But now we've got you on the show. Bitcoin's just had a pump. I'm very keen to know what your thoughts are around what the rest of the cycle is going to look like.
Yeah, well, so I think the rally that we're in right now is what I've sort of referred to as like a death cross rally, if you will. Let me see if I can share my screen here, and that way people can follow along. But basically, we get these death crosses where the 50-day moving average goes below the 200-day moving average. We had one in 2023. We had one. So here's the one here in 2023. We had one, of course, in 2024. And now we've had one in 2025. And one of the things that always happens going into death crosses, or frequently happens, is that the market sells off into the death cross, right? And it makes sense because the market has to go down for a shorter term moving average to go below a longer term moving average, right? So you get this drop, you then get a death cross. A lot of people freak out, they panic sell, but usually what happens is the market rallies on the other side of death cross, right? They rally on the other side of it. You can see that last year it rallied, the year before that it rallied. Hell, even if you go back to 2021, you can, sorry, I need to fix that. If you go back to 2021, you can see we had a death cross, and around the time of the death cross, Bitcoin put in a low and then retested that low, about a month later or so. And then it went to a new all-time high. The other time that we have to at least show before we get really into the depths of this is that there was a time in 2019 that we have to at least consider, because a lot of this cycle has been really a reflection of monetary policy, right? Bitcoin dominance has been going up far longer than most people thought it would, including myself, right? But the main reason that I've stayed bullish on Bitcoin dominance is because the Fed never ended quantitative tightening. Had they ended it, I would have become bearish on Bitcoin dominance, but that never actually happened. And so it's made sense to just stay bullish on Bitcoin dominance. But if you look at 2019, you'll see there was also a rally into the death cross. And what ended up happening was it basically just swept the high that it broke down from, right? It swept that high and then went and put in a lower low, right? It went and put in a lower low after the death cross. So what I'm looking for right now And actually, one of the things that we talked about the last time on this channel, we said there could be at least a local top on January 20th. And the reason we said that was because we were going to be seeing pricing imperfection, right? You have the new administration coming in, people pricing in a strategic Bitcoin reserve, right? You have deregulation, Gary Gensler resigning. It was also 54 weeks after the Bitcoin ETF launch. We know the QQQ topped in 2054 weeks after its ETF launch. So January was always likely going to be a de-risking process. The good news, right? The good news is that despite the current de-risking, Bitcoin has actually managed to stay above its 2024 high, which is not what a lot of markets can say, right? Like the NASDAQ has already tested its 2021 high. So the good news, as far as I'm concerned so far, is that Bitcoin remains above the 2024 high. I also think it's possible that it could go below that on a wick, and the market confidence, investor confidence, to not necessarily be shaken to the point where it can't go higher. But what I'm looking for here, Rand, is if this is like a 2019 style death cross rally where it just comes back up here and sort of sweeps the high from where it broke down from, it could lead. I mean, it could lead to a lower low. But the good news for Bitcoin investors is that even in that case, if it leads to a lower low, because we have not yet tested this area, I would say there's at least a decent chance that that area could actually hold as support. So my primary thesis, and I'll stop rambling for a little bit, right? My primary thesis right now is that as long as Bitcoin does not get a weekly close below the 2024 high, then the cycle is still intact, right? It's still intact largely. I mean, even in 2017, you can see that the market retested the 2016 high, right? That's the 2016 high. Market went just below it in 2017. So I would argue that as long as we're not getting weekly closes below 73K, then there's always hope, right? There's always hope. As I've said before, right? The bears sound smart, the bulls make money is how the markets usually work. If this is a 2019 style rally, right, where the Fed ends QT and in the coming months, and then it actually ends up going to a lower low, which is probably not what people would expect. If that happens, then my thought process on whether it'll end up being like, rally into November, like a normal right translated cycle or a left translated cycle, would just simply depend on, does the next drop form a higher low up here, or can it find support in here? As long as it can do one of those two things, then the cycle continues, right? As long as it's a higher low.
Your base case is actually that we're going to come back and sweep the low. So you're saying don't get too excited about this rally, because I see a lot of people talking about this rally and talking about, this one taking us through to new highs, and, Bitcoin is going to start following gold. Your base case is that this is at best getting us to 100, 105,000, and then actually going to come down and actually test the lows.
I would say at the very least, you're going to put in a higher. I mean, look at the last 2 years, right? Look at the last 2 years. After the death cross, there was a rally, but then you came back down to find support at the 50-day moving average, right? That happened the last 2 years after getting that initial rally above the 200-day moving average, right? You can see it above the 200-day, back to the 50-day. And then this last year, right? Above the 200-day, back to the 50-day. Right now, the 50-day is at 84K. It's going to be at 85K within the next few days or so. So I would say there's a good chance you're going to see Bitcoin retest that 50-day moving average at the very least, right? Sometime, within the next, I would say 2 to 3 months. And it could be as late as July, right? It could be as late as July. But that is what I'm thinking right now. That doesn't mean it has to immediately go down, right? It's always possible that it actually sweeps this level up here, goes higher into the 90s before seeing something like that. That's what I would consider to be the optimistic scenario, right? Finding a higher low, just like it found the last 2 years after the death cross, right? If it's 2019, which I think it would be foolish not to at least look at that scenario, because this is exactly, I mean, it's been following monetary policy, right, the entire way. This is something where if it doesn't hold the 50-day, then it's likely going to go to a lower low, right? And if Bitcoin comes back down to this level at any point this year, then I would operate deterministically and say the cycle, that's it, right? It's not going to go to a new all-time high until, like, say, the next cycle, right? But as long as we're above that, I think there's always hope for upside. I do think you will get a pullback at the very least before you get back up near the highs, right? And I would hope that it would find support at that 50-day moving average. If not, it will likely go below that low and retest some of these levels from 2024.
So I mentioned to you when we started this, I said to you, if we had spoken a few days ago, probably this conversation would have been a little bit different, because I think a few days ago, people were questioning whether this was still a bull market. Like, people were saying, is this a bull market? Is this the beginning of a prolonged bear market? What has been your indicator that we're still in a bull market? Or do you think we're still in a bull market?
I think there is a non-negligible chance that we are, in fact, in a left-translated cycle, right? And I mean, in order to understand that, we can't even look at Bitcoin. We have to look at the stock market, because Bitcoin has never had a left-translated cycle before. I would say there's probably at least there is a 50% chance that it's a left-translated cycle. I mean, there is. I'm trying to find signs that it's not, right? Because up until this point, a lot of the things that we've spoken about before have actually happened, right? I mean, they actually have happened. We saw Bitcoin find that top on January 20th. And again, that it's following that QQQ. And we also saw the Bitcoin and the stock market kind of top out around the same time of the new administration. And in left translated cycles, that is when the market tops out. It's when you get a change in presidential administrations in the United States, is when you sort of see those peaks for left translated cycles. So what I would like to see, I mean, the best case for the markets right now is just how well Bitcoin has been doing, right? I mean, the stock market hasn't really been doing that great. And the only way that I look at the stock market in a bullish way right now is to look at the S&P and say, look, there's two things, right? There are recessions where you only get 20% drops, right? There are recessions, and I do think we're not going to get out of this without some form of a recession at some point, right? We have had a 20% drop, and there have been 20% drops, and that's all we've gotten at some points with recessions in the past, right? But the thing that I look at to provide some hope for the stock market is this S&P divided by M2. And I think I've shown this on your channel before. Maybe correct me if I'm wrong. But basically, this level that the S&P just got rejected from is the same level it got rejected from in 1998 when you account for the money supply. And during that time, it had a brief pullback. It rocketed back up for a few weeks, kind of like it's doing now. It then went back down to sweep the low, right? It went back down to sweep the low. And then we went into a larger distribution phase, right? We went into a larger distribution phase. So that's why I say, right, like if the S&P were to go back down and sweep this low in the coming months or something, coming weeks, coming months, there's a good chance it would drag Bitcoin down with it, right? Bitcoin has a way of holding on for a long time, even when the stock market's going down. But if it keeps going down, then eventually Bitcoin pays attention.
Okay, you mentioned a few times that you mentioned QT and the end of QT. And the last time Powell spoke, he actually mentioned that they were going to pause or slow down QT because he was scared that the Treasury general account would need to get replenished, and that would suck liquidity out the system. Does that not, in your books, count as a pause or a stop in QT?
So they've slowed it down, right? So they've slowed down some of the runoff, but they're continuing the runoff of mortgage-backed securities, right? MBSs. That hasn't actually changed. So I don't remember the exact number, but I think they're still going on with QT at approximately 40 billion a month, plus or minus a few billion. I don't remember the exact number, but it's around 40 billion a month. This is not the first time this cycle that the Fed has announced that they would be slowing down quantitative tightening. And the way I look at quantitative tightening really with crypto is through the lens of altcoins, right? If you look at altcoins on their Bitcoin pairs, which is what this chart is, total 3 minus USDT divided by Bitcoin, the last time the Fed made a similar announcement was May of 2024. So May of 2024, and it was really early May. So right there, the Fed made the same announcement, basically, that they just made a few weeks ago. And both times when they made that announcement, altcoins on their Bitcoin pairs were just below their 21-week EMA, or the 20-week SMA, just below their 20-week SMA or 21-week EMA. They made the same announcement. And just like in May of 2024, right after the announcement, like people think it means alt season because they're slowing down quantitative tightening. But the problem is that the wind is still blowing in the wrong direction, right? I mean, even though it's slower than it was, it's still blowing in the wrong direction. And as we know, right, the coefficient of static friction is a lot greater than the coefficient of kinetic friction. You cannot, you simply cannot get, in my opinion, a durable alt season during a period where quantitative tightening is continuing, even if it's at a slower pace. So just like back in May of 2024, we saw alt Bitcoin pairs collapse after that announcement. They've done the same thing this time as well. And so in order to really see alt Bitcoin pairs bottom, in order to have a chance at a time when alts will durably outperform Bitcoin, I think you need to see the Fed in quantitative tightening. That's exactly what caused altcoins to really start to show strength last cycle. And my guess is the same thing is going to happen this cycle.
So when would the Fed end quantitative tightening? Like what in terms of like, what are the signals? What are the timings that you think the Fed would end quantitative tightening?
If you had asked me a few weeks ago, my answer might have been different, right? As you said, I think as long as nothing breaks, as long as nothing was going to break, I think they could have continued QT, through the entire year, potentially not even ending it until 2026. But given the fact that the markets have dropped 20% in a relatively short period of time, and given the FOMC minutes where like the median projection of runoff sort of subsiding is sometimes mid 2025, according to the last FOMC minutes back in February 19th, there's a chance they could end it this summer, right? There's a chance they can end it this summer. I don't know if they're going to do it at the May meeting or not. But, given what I know right now, then I would say potentially this summer. If the markets recover like 1998, if they just recover back to new all-time highs and they don't have to end QT, then it's still possible they could continue it out until 2026. But remember what I always said, right? And maybe we can talk about Ethereum, because what I always said, in order to get a change in monetary policy, you have to have pain, right? You have to see these assets break down, because if they don't break down, there's not really a reason for the Fed to pivot. This is the pain, right? You're seeing Ethereum break down. We saw Ethereum break down, and you're likely going to see a pivot to monetary policy. I don't know if it's going to be May or what, but if you made me guess as to when, I would probably say it's going to be May, June, or July, right? I don't know exactly when, but I would guess May, June, or July.
What about this Bitcoin versus M2 money supply chart? So it's been posted on Twitter quite a lot. I think Raoul Pal has been posting it quite a bit, and he said that the M2 money supply has turned, and usually Bitcoin follows the M2 money supply with a 10-week delay or a 12-week delay or whatever it is. What do you make of that Bitcoin versus M2 money supply?
Yeah, I mean, I think it's true that in general, asset prices go up because they're never going to stop printing money, right? Like that's kind of the idea. Here's an approximation, I think, of what people are referring to. This is not with a lag, right? This is just looking at the money supply. And I guess we could overlay Bitcoin onto this chart. And I imagine there's some trading view indicators I could quickly pull up if you want me to look at that exact lag. But yeah, like you can see the correlation. If you go throughout history, right? If you go throughout history, asset prices generally go up and the money supply generally goes up, right? And so, I mean, it makes sense that these are highly correlated, but there are times, right? Like it just like any correlation, they can eventually break down. They don't always have to play out like that just because they always have in recent memory. In fact, in 2022, in 2022, when we saw the money supply going up into April, right? Even into April of 2022, and Bitcoin never followed it, right? I mean, if you looked at this, at Bitcoin's top in November of 2021, right? If you said in November 2021 that Bitcoin, if you said that it was going to go higher because the money supply kept going higher, you would have been wrong, right? You would have been wrong. The money supply went higher for several more months, but Bitcoin dropped. Remember, the money supply that they're talking about is a function of the dollar, the DXY, right? So, and the reason it is because you have to convert all those currencies to US dollars. So the reason why the money supply looks like it has exploded over the last few months
is because the 𝗙𝗫𝗖 is devalued.
It's because the 𝗙𝗫𝗖 is devalued, right? It's because it's not like everyone's just printing money like crazy. It's just the 𝗙𝗫𝗖 has been completely devalued. And, this was my base case for the dollar. I tweeted about it. I said a rally up to 109 to 110, followed by a collapse. What I think is going to happen now, I think the dollar at some point soon, sometime probably in the second quarter, we'll likely get a rally back up to its 21-week EMA. Like, I think it's going to come back up here. And when that happens, net liquidity will get drained some. And then from there, I do think the dollar will probably go down into late 2025 before then probably going back up in 2026. So that's more or less my projection on the dollar right now. But I do think the dollar will likely get a bounce at some point in the coming weeks. And when that happens, it will be, it will have an effect on that chart. People are looking at the money supply. But look, at the end of the day, over a long enough period of time, absolutely, they're never going to stop printing money. So asset prices are never going to stop going higher.
Okay, so that's going to bring me to, I think, probably your favorite topic. So I was hoping to save this one till the end, but I'm going to get into it right now, which is Bitcoin dominance and therefore the performance of the altcoins. We're at a cycle high now on Bitcoin dominance. I think we're at about 65% on Bitcoin dominance now. Where does this thing go? Because I remember when it hit 60%, you said, cool, that's the trade. You called it to 60, it got to 60, and it just seems to be accelerating upwards. What's your new thesis on Bitcoin dominance?
Yeah, so at 60, I was willing to hedge my view on Bitcoin dominance. And you could actually see there was a pretty big pullback on it. But the reason why I think that it's just continuing to go higher, again, is just because monetary policy is just not changing as much as we want it to. It just really never changed. There was a change in monetary policy, a brief one, back when it did hit 60%. Remember, the Fed started cutting interest rates. They cut interest rates by about 100 basis points. But I think the reason why it did not lead to a durable change is because the Fed funds rate is likely still above, right? The Fed funds rate is likely still above R*, and R* is the neutral rate, right? The theoretical neutral rate at which if interest rates are above R*, the economy contracts, and if interest rates are below R*, then the economy expands. And so I think the argument here is that the neutral rate is still below the current Fed funds rate. And that's why higher risk assets just simply keep on bleeding to lower risk assets. So in order to get Bitcoin dominance to durably top, and not just for like a week or two or a few months, I think you need probably 2 more rate cuts. And also I think you need an end to quantitative tightening. And the reason I say 2 more rate cuts is if you look at what happened last cycle, right? If you look at what happened last cycle, you'll notice that the Bitcoin dominance really started to turn around after the Fed cut 75 basis points. And you might say, well, this cycle they've already cut 100, so why wouldn't it be?
But they started lower. They started lower last cycle.
Yeah. Right. The terminal rate this cycle was 550 basis points, whereas the terminal rate last cycle was only 250. So this ratio, the ratio last cycle where dominance turned around, is still higher than it's reached this cycle. In order for it to be the same, it needs to be 165 basis points of rate cuts. We just haven't gotten there yet. We also haven't seen an end to QT. Until that happens, it's possible that Bitcoin dominance goes higher. By the way, Bitcoin dominance does not only have to go higher because ETH Bitcoin is collapsing. I think a lot of the reason why Bitcoin dominance will go higher, in my mind, at this point, is mostly due to the rest of the altcoin market. I mean, Ethereum has been demolished at this point. I do think a lot of it could come from the rest of the altcoin market.
Okay, so I mean, now what is your do you have a new prediction or a new thesis as to what the cycle top's going to be for Bitcoin dominance? I mean, do you think we're going to get as high as we were last cycle, which is around, what, a 70%?
Yeah, I think for now, what I'm looking at is if you look at this fib retracement tool, you can see that dominance kind of finds resistance every time it hits a new level. And that next level at this point is right around 66%. So I'm thinking around 66% is a good short-term target. And look, it's possible it doesn't make it there, right? I mean, at any point, if the Fed ends QT, I feel like everyone reserves the right to pivot their view on Bitcoin dominance if the Fed just comes out and says QT is over. But there's I guess also a high Bitcoin dominance is not bad if the Bitcoin price is going up. So it's only bad if the Bitcoin price is going down. Right. And the chart that might actually be more insightful than Bitcoin dominance on this matter is actually Bitcoin dominance plus USDT dominance plus USDC dominance, because this could arguably be the flight to safety, and relative safety, right? You're either going to Bitcoin, right? Altcoiners are either going to Bitcoin when they see Bitcoin exploding up and their altcoins just not keeping pace, or they're going to USDT or USDC if they're scared, right? Last cycle, this metric topped at 75% or 74, between 74 and 75%, right? That's when the Fed ended quantitative tightening. And right now we're between 71 and 72%. So if this thing just goes a little bit higher, it's going to be at the same level that it essentially topped out at last cycle. So I'm actually watching this pretty closely to potentially call a top on Bitcoin dominance.
Well, okay, so that's a top on Bitcoin dominance. What about ETH? I mean, ETH has been one of those charts that just has never caught a break. It's just against Bitcoin, it's just bled and bled and bled. I must say, I don't actually remember many charts that look as bad as this. Is there any hope for ETH holders?
I think there is hope at this point. I still think there is hope. There is, and I've sort of talked with some people about this. Like, there's always this thought in the back of my mind that, like, well, it's possible that Ethereum could be a relic. Like, we talked before about relics, like altcoins that exist one cycle and that no one even knows what they are a few cycles later. I'm not willing to accept that at this point. I don't really think it's a relic, but I have to say, Rand, I mean, if Ethereum is a relic and it doesn't recover, I feel like how does everyone not become just a Bitcoin maxi at that point, right? Because, like, if the number 2 asset just essentially bleeds back to Bitcoin forever, how do you not, right? I mean, but look, I would say the 2 reasons that I would look at for something like ETH, or there's 3 reasons why, I'm not saying ETH can't go lower on its Bitcoin pair, but I do think it's getting somewhat limited at this point. 3 things. The first thing is, we're going to start with the most hand-wavy thing, right? The probably the thing you shouldn't put as much faith in. If you look at the weekly RSI of ETH Bitcoin, it's actually tagged this trend line here, for the 3rd time, and that's basically when it bottomed last cycle, sort of that last tag of the trend line. It also bottomed last cycle exactly when the Fed ended quantitative tightening, right? Like, that's when it ended. That's when ETH Bitcoin bottomed. And I think people keep thinking like all this stuff is dead because it keeps going down. But remember, it hasn't had a chance to go up because we're still in that phase of monetary policy. Also, one of the advantages of a proof of stake network, right, is earning yield, right? Earning interest. But as I've said before, if you can get a higher interest rate on a T-bill or a CD or a money market account,
what's the point?
What's the point? Yeah, like, what's the point? Right? Why not just go get the risk-free return rather than bet it on something that has all this volatility, right? So that's the thing. And then the last thing I want to mention, we've obviously talked a lot about alt Bitcoin pairs, right, and how alts are bleeding against Bitcoin, but they've been doing the exact opposite against ETH. But what I'm looking at here is alts.
That is a crazy chart.
Look at that chart. Look where they are. Look where they are. So I think alts right now are very overvalued against Ethereum, right? I think they're overvalued against Ethereum. I don't know how much higher they're going to go, but I would reckon that this chart is an oscillator, and I don't think alts are going to continue to outperform Ethereum. So my guess is that this chart will actually start to come back down over the coming years. That's my guess.
If it does, I mean, like, if it breaks up above this and it breaks down below the other chart, then would you be calling ETH a relic?
Look, honestly, like, if I would say if the Fed ends QT and ETH keeps dropping on its Bitcoin pair, then what else can you say, right? What else can you say?
You can say your prayers and you can put it in the ground.
Right. Yeah. I mean, but again, like, that's sort of, I think this is, but if you're looking for the hope for like the Ethereum people, right, that is the hope. And you could also look at something like ETH dominance, right? ETH dominance might be a relevant chart to look at because it basically just went down to the same level it was at last cycle, right? I mean, this is kind of where it bottomed out last cycle. That doesn't mean it's going to bottom there again. I mean, it could be setting lower highs and lower lows, right? For all we know. But that's the hope, right? And again, for me, I don't think you can really get too confident until you see an end to quantitative tightening. But again, I don't know exactly when that's going to occur. Probably sometime this summer.
All right. What about Sol? You had a tweet on Sol, which I read the other day. I want to see if I can actually find this tweet. Yeah, it's this tweet over here. Yeah, you said, here's a good example of what I mean with regards to people panic selling. And you spoke about the ETH BTC versus the Sol BTC pair. What's your thesis on Solana at the moment?
Yeah, so I think if you look at that, you have to look at the Sol Bitcoin market cap ratios. And so this is what I was talking about. A lot of people panic sell on these drops. And I actually, I've gotten some stuff right this cycle, but certainly not everything. And one of the things I really kind of caught me off guard was what happened with ETH Bitcoin, right? When ETH Bitcoin, I became very bearish on ETH Bitcoin right here, and I felt like a genius down here. And then the market ripped my face off and came back up, right? And then I had to watch it come all the way back down. And so what I was referring to with Solana is if you take just sort of like this fib tool for Ethereum, you can see that it bounced that 0.236 retracement and then eventually came back down. So like if you were to look at something similar for Solana, right, the idea was that, if you've waited until then to sell, you might end up selling into a local low for a little while. And so my guess, the way to look at the Sol Bitcoin pair is, look, I think that Sol Bitcoin is following ETH Bitcoin. I mean, aren't the charts nearly identical, right? And this almost,
so scary.
I mean, look at the drop by Sol Bitcoin, right? This was a 90% drop, an 89.77% drop, right? And then it had this several 100% rally where it went into this like distribution phase, right? This is Sol Bitcoin. Now look at ETH Bitcoin. It's the same exact drop, right? It was an 89% drop, like almost to the exact like decimal in terms of like how far it dropped, right? 89.5%, right? It's the exact thing. You get this massive distribution phase, right? For Ethereum, that distribution phase was mostly fueled by NFTs. For Solana, it was obviously mostly fueled by meme coins. But eventually, ETH Bitcoin faded, and eventually it took out that low. Even though it bounced off of that level a few times, right? It eventually faded, and now it's all the way down here. So when I look at the ETH Bitcoin market cap ratio, look,
it's the same chart.
It's back. Yeah, this is ETH Bitcoin.
Yeah.
When it was up here at the merge, no one wanted to believe that it could possibly come back down here, right? No one wanted to believe that. And this is what I was saying with Sol Bitcoin, is that it's likely going to come back down here, but it's a stochastic process, right? It doesn't just go straight down. And that was what I was trying to communicate with people that were panic selling their Sol Bitcoin, was that, look, there's likely going to be some relief rallies along the way that you could probably take advantage of, where Sol Bitcoin maybe rallies back up to its 20-week moving average. And then you could use that as an opportunity to sort of, get a better trade in if you want. But that's my view on Sol Bitcoin. And I do think it will eventually come back down here, but it's going to be a stochastic process to get there.
All right, let's talk about gold for a second. So, I mean, people are now saying we had the decoupling. So we'll say it was quite a short decoupling, but it was where Bitcoin decoupled from the Nasdaq and stocks, and Bitcoin started to follow gold. At the same time, gold was going absolutely parabolic. I think you got the chart there. I'm keen to hear your outlook on where gold goes, and actually if Bitcoin actually follows that.
Yeah, like I've actually been pretty bullish on gold for the last few years. I think it's likely going to continue to do well. For the most part, my thought process on it is that whenever the S&P 500 gets a correction, we'll likely see gold correct as well. But I think that gold will get to new all-time highs quicker, right? And that was what I was thinking. And then it happened when the S&P dropped. Gold pretty quickly got to an all-time high. So you can occasionally get drops by gold, even in recessions, right? Like here's the financial crisis, and here's the dot-com crash. But you can see that gold tends to hold up a lot better during those times. It's sort of like the elusive promise of future quantitative easing. I think is one of the reasons why it's driving gold higher. It could also be just people losing faith in some of the current monetary systems as well. Could have something to do with it. But yeah, like I've been pretty bullish on gold. I think that gold, though, it behaves a lot differently than Bitcoin, which I think is actually a good thing for Bitcoin, because for the last 10 years, gold hasn't really done anything. It's only started to do well the last couple of years. So I think it's probably better that Bitcoin behaves more like a risk-on asset. Gold is more of a risk-off asset. That's my interpretation. I don't really think they behave the same way. I think if Bitcoin's going to go higher, it's going to be because the stock market's going higher, not because gold's going higher.
Would you be buying gold now?
So I bought gold for years, and my cutoff was 3K. So I was a buyer up to 3,000, and then even got this pullback below 3,000 right here, where I was able to get a little bit more. But I'm not chasing it above 3K. I think that for me it's a little bit too hot. like if you look at it on a monthly time scale, if you look at gold, you know, I wish I had another metric to show you, but like even if you look at the monthly RSI on gold, I mean, look how high it is right now. Like it's pretty high. So I do think it's going to get a correction sometime soon, but when it does, I would be a buyer of that drop. So that's kind of where I am. I have a sizable gold position, and to give you an idea, you know, for years, like throughout most of my investing career, I used to not even have any gold, and then in like 2019, 2020, 2021, I had like 3 to 5% of my portfolio. But at this point, it's closer to like 8 to 10%. So wow. and the reason why it was so low for so long was because gold tends to underperform the S&P 500 throughout most of its existence. But there are phases where gold outperforms the S&P, and I just thought that, you know, that we were going into a period where that would happen. So I'm not a buyer right now. I was a buyer below 3,000. If it were to go back below 3K, I'd probably be a buyer again.
Funny. So you say that gold's about 10% of your portfolio. What makes up the other 90%?
So most of it is, so I'd say the S&P 500 is a good part of it. Well, I mean, it's not exactly the S&P 500. It's mostly like low expense ratio index funds. So the two main ones that I've bought are FZROX and FZILX. FZROX is domestic for the United States. These are on Fidelity. FZILX is more international. So recently, international has been doing a little bit better than domestic due to some of the uncertainties we've faced over here with tariffs and whatnot. You know, for a long time, I always thought there would be some type of reversion to the mean where, you know, like international stocks would start to outperform domestic for, you know, United States. And every time I've thought that, like it never happened. And it turned out that my domestic portfolio was always outperforming the international one. I've just noticed recently the international one was starting to do a little bit better. So that makes up a significant portion. You know, and I've always said this, and people always have a hard time believing me, but like my stock portfolio tends to be about like 3 times larger than my crypto portfolio. And the reason for that is because I don't really have to worry about the S&P 500 dropping like 80% like I do with crypto, you know?
So do you rebalance? Like, do you rebalance your, when Bitcoin goes on a run, do you rebalance and move more money into stocks?
Yeah, I will rebalance occasionally. Yeah, like I'll sometimes sell, and I mean I sold some stocks at not too long ago when I need to make like a large purchase, right? Like at one point I bought our house and I needed some liquidity, right? So I sold some stocks at what I thought was a high enough risk level. I mean, stocks continue to go up after that for a little while, but that's what I did. So that's the S&P 500. I do have some individual stocks, like I do have Meta, I have Microsoft, you know, I have Google and Apple, you know, a lot of companies that I personally use myself, I do have some exposure to. I do have some exposure to Tesla as well. I got some at like 140 and then 200 earlier this year, or last year and earlier this year. But as far as other stuff goes, right, gold, 1%, don't laugh, right? Don't laugh, but 1% is TLT, right? Bonds.
I also have about actually I have about 2.5% TLT at the moment, and it's just I've got to take a bet that if the interest rates drop, that the TLT is going to fly. So I've got like 2.5% of my portfolio sitting in TLT at the moment.
Yeah, I got some. I think I got some in like the mid 80s back in. It was back when the long end went, you know, to like 5% or something. So I got some in the mid 80s.
I think it's more or less the same place. If I look at it now, okay, it's 87.40 at the moment. So I mean, it's
yeah, that was right around my buy. Like I think I'm basically break even on it right now. And I'm not like, there does exist a scenario, as crazy as it might seem, where the long end does go higher if we don't get some of this, like these trade issues resolved. Because look, I think one of the reasons why the 10-year yield went up so much recently is, for decades, I think that foreign countries have basically assumed that buying this stuff is risk-free, you know? And it essentially is, right? It essentially is. But I think for the first time in history, there is maybe the repricing of this stuff from being risk-free to being mostly risk-free, but because it's not zero, I think that was one of the issues. And also we saw inflation expectations shoot up recently due to probably all these additional tariffs. So like, it's not impossible for the long end to go higher if the economy doesn't really slow down. I mean, that's the only direction it's going to go. But if the economy is slowing down and the Atlanta Fed is right, then we should see the yield curve, the long end, come back down. So right now I'm like 1%. I'm 1%. But if the long end goes up again, I will probably go to like 3 or 4%.
I was about to say, I don't think this is an embarrassing trade. I actually think buying the TLT here at these levels, if I go back, I mean, the last time the TLT was at these levels was, I mean, my chart's not even going that far back. I mean, let's go on to the monthly and see what we can find here. It was 2007. So I think, like, I must say, I'm hedging myself with a little bit of TLT here because I kind of know that Trump's plan is to bring interest rates down, and I think when he brings interest rates down, this will automatically follow the same trajectory. So I don't think it's a bad trade here, to be honest. Ben, before I let you go, let's talk about the slowdown in the economy and inflation. Trueflation says inflation's 1.39. There's the Atlanta Fed is predicting a negative GDP growth. Like, how do you see the US, like the Fed's job? And when I say the Fed's job, inflation, unemployment, and effectively the speed at which the economy is going. Where do you think this is going?
I think if we can get past the tariff stuff, and if somehow that can get walked back and we can just go back to normal, then it's possible we get a 1998 repeat, that chart we showed earlier, where you just get back to all-time highs within a few months, and we get a normal right translated cycle, which is what, frankly, probably everyone wants, right? In order to get alt season, which is really why everyone, is watches a lot of shows, right? In order to get alt season, you need a right translated cycle, right? Without a right translated cycle, you're probably not getting an alt season. So in order to get that stuff, I think the markets need to move past a lot of this uncertainty. I think that there is damage currently being done, but I also don't think it was unexpected. I think Trump, I think what he's trying to do, I mean, he probably knows that in order to get yields down, he has to have lower asset prices, right? If you don't have lower asset prices, the long end can't really come down. You have to bring down inflation. If the markets just keep screaming higher month after month after month, yields aren't going to come down. And I think he's basically basing a lot of his success on where the 10-year yield goes. I think that's what he wants to do. So I think that if we can get past this uncertainty within the next month or two, and we can move past this, and we can get all these trade deals out of the way, then it's possible that we could get a 1998 repeat where we get a normal right translated cycle. If he does not, and we get to this 90-day tariff pause thing out in July, and I swear, it always happens when I'm out of town, because the last crash happened in April, and the next time I'm going out of town, I'm going to be gone for a week and a half in mid-July when this 90-day tariff pause hits.
Will you just text me before you go, just to remind me, please?
I know, really. Yeah, seriously. So if he does not, like, if they don't walk any of it back, or if it just leads to deteriorating relations with other countries and whatnot, then that could be all she wrote for the cycle. And if that's the case, and I've said this before, right? If the market cannot put in a new all-time high like this summer, then it's probably not going to, right, for at least a year or more, right? Because I think, look, you've been in crypto for a long time, right? I mean, think about the 3 bear market years, 2014, 2018, and 2022. It's hard not to be deterministic and just assume that 2026 is going to be a bad year for crypto, right? Like the midterm year. So the longer we go without putting in a new all-time high, I feel like the closer we're going to get to that midterm year, where basically a lot of people, and I mean, it's just every one of them's been a bear market so far, and I don't know why this time would be any different. So that's kind of where I stand right now. I think, oh, by the way, with in terms of the portfolio stuff, I do have cash as well. Like, I am about 30% cash, and then my crypto portfolio is still like 90% Bitcoin, my crypto portfolio. And the only other thing I have besides Bitcoin, other than like a few dust projects.
Let me guess. Fartcoin.
Yeah. Go ahead.
No, not Fartcoin?
No, Ethereum.
Listen, Ben, it's always it's always so amazing getting you on the channel. This wisdom is unbelievable, guys. If you want to follow Ben's channel, and if you don't already follow Ben's channel, there's a link below. Just go and click it and just follow Ben's channel. Also, Ben has an amazing product, which you've obviously seen me use on the show very, very often. It's an analytics product. It's called Into the Cryptoverse. and you can get the product and join Ben's community. And there's a whole lot of videos and everything else that explains it. There's a link to that below as well. Go and have a look at it. I strongly recommend that you follow Ben on Twitter. All of his socials are below. Really a good friend of the channel and really someone who really brings value. Ben, thank you so much. I know we were planning on having this last week, but I'm glad we had it this week because the whole mood changed and everything else changed. I guess I'll see you in Vegas, right?
Yeah, I'll see you in Vegas. Only a month from now.
A month from now, I'll see you in Vegas. I actually look forward to it. Is there going to be another Into the Cryptoverse party in Vegas?
There always is.
All right, so guys, join Into the Cryptoverse before, and then come to Vegas and meet us at the party. That's pretty much the best trade of the cycle at the moment. All right, Ben, thank you so much, my friend. Guys, to you guys, thank you very much. Remember, guys, we are still planning on making a lot of money this cycle. And your job is actually not to make the money, but to actually keep the money. And one of the best tools that you should be using to keep your money is to get a VPN. And the reason why you need to get a VPN is because a VPN masks your IP address. You can see that right now, I'm surfing without a VPN, and everyone knows exactly where I am, right? The government knows where I am. Hackers know where I am. It's not a good look. You can protect yourself for like $4 a month, and you can support the channel at the same time while you're doing it. There is a link below. The link looks like that. Just click on this link below, download, get the VPN. I really believe that it's going to keep you very safe. All right, I will see you guys again on Monday. Wish me luck for my polo match on Sunday. I'll send you guys updates. Until then, trade well, my friends.